Patron, take them away.
And a warm welcome to one and all. This is your first time here. I'm the big fella Scruff with an over-obsession of coffee and trying to put trading in the real world. And this series of videos that we're doing on small accounts is really doing that. Because one of the things with trading is it's always the belief that there's quick money. You're going to put a small amount into a broker and you're going to make, well, a fortune relatively quickly, getting your Lamborghini magazines out, all that sort of thing. It doesn't quite work like that. It takes money to make money, but that's not to say you can't start small and build up gradually. It's how I built my accounts up. And what you'll often see is in the beginning, there's hardly any movement. And that's the dangerous time of trading, because you sort of lose heart. You think, oh, it's only a fiver. It's only £1. Who cares? Well, if you do care and you show the chart with the respect that it deserves, suddenly you're not making £1. You're making £1.10. Then you're making £2. And then maybe it's a year down the line, that £2 is 20 quid at a time. So you got 5 trades on, there's 100. That's where the power of trading comes from. It's the power of compounding, the power of slow, steady growth. And you just recycle your profits to make it meaningful. Now, this series that we're doing, I started it with a shade over 100 quid in December. We now, first week of February, so I'm just doing the update. So the account is pretty small. But in terms of growth, it's huge, absolutely huge. Let me show you. So I'm purposely only doing shares on this. Now, I'm not good on shares, but I do have a strategy in place called the River that is perfectly suited to it. I don't need to know what the companies are. I don't need to know what their earnings are, anything like that. The River picks it out for me because it's working on momentum and motion of the market. So it's very simple. Now, if I look at this, and one thing to bear in mind, that's £2.10 in profit. Its drawdown is only £1.95. This is one of the reasons why I'm looking at shares, because I can have a multiple amount of shares and they ain't going to cost a lot. Okay. Now, I do track on a spreadsheet, which is here, and obviously we're just into February. We're only a couple of days in. These are my open trades. Some of them are in profit, some of them are not. So my running winning rate is 33% out of these, but that's just what's moved in. I expect them to be underwater for a little while. Okay. Now, my profits, as you can see, is not brilliant. It's running at 1.6. But in the grand scheme of things, I know hedge fund managers that will bite your arm off for 1.6 running profit. They genuinely would. And our current balance is now 169.09. Now, this is where people start turning off. Go, what a waste of time that is. Let me show you something. This is the growth chart from when it started. Start with 118 and it's slowly building. It's made 50 quid off pennies, which is a growth of 42.6% from the beginning of December, 2 months. Tell me a bank in the land or any institute that will return that amount of money. There isn't one, not one. So my money is working for me. It's getting better. It's getting stronger. Now, in December, yes, the close win rate was terrible, but that's because the ball was starting to roll. And obviously, you're just starting to build up your portfolio. But in January, it's 92%. 92% hit the runners. Now that was done not through luck, but through management of the chart. And I'll quickly dance onto that and show you. So if you can imagine this chart, I take everything on a daily. So everything opens up on a daily. And what we're doing is we are moving from one level to the next all the time. There's a big space here. And what I'm going to be doing is, if I put a measuring tool on where it opened to where it gets to, this will start showing me where I can place my profits. Now, why is this? Now, at the moment we're above here, I need it to get above that level. So once it's above that level, I'll be able to pull up this little box and you'll see it run. And then this, I'll be able to move up with it. Okay. Now, at the moment, I can actually pull this into break even, which is what I want. Put that box there. And I'm going to leave it. Now, when that arrow starts getting above this yellow line, I'll start dragging up the profits or locking in profits with that stop loss. Why do I do it that way? Well, I'd never really want to give more than half of my profits away, but I also want to let it run a little bit first. I don't want my stop too tight before it starts accelerating, because it might just come back, nip me out, and then I'm done. Sort of case in point, in the last day, that shot down to virtually where that stop is and then shot away back up. Now, if I pulled my stop in, that would have took me out. So that's kind of why I want it up there, which means if the price is up there, my stop's down here out the way, and if I get clipped, at least I get paid. That's the general gist of it. Now, there's also, I have to be able to pick out the stocks as well. Now, as you can see, I've got some that are running, which runs on with what's going on. Some are good, some not so good, but we're dealing with pennies. And what I'll also be doing this week, because we've flipped over into a new whole number, is that's now become a maximum of £2 where it used to be £1. I'm going to start edging up the bids that I put in. So if I open up a share instead of £1, it's going to be now £1.10, and I'll do that till I have a closed position in here. If it's closed and in profit, I'll then edge it up to 121. When the next one closes out, I'll edge it up again, but it won't exceed £2. All right. Again, why do we do that? It's slow, steady growth, but I want to bank profit in order to pay for the bigger position I'm about to put onto. It's just sort of the way I do things. It's a little bit odd, I guess. If we look at this, just before I show you how we pick some shares, we didn't close anything out yesterday. If I go through to there, you can see that's the exact same number that my spreadsheet is tracking. And if I trick analytics over the last 30 days, well, it's shot up. I'm not a lover of this analytics thing. I prefer my spreadsheet, but it works out roughly the same. But it's shown in the last 30 days, 17 out of 17 closed in profit. They were completely shut because this is a running 30 days. None of them lost, so I can't work out a ratio making a return rate of 1. But that means the strategy is doing well. If there was a loss in there, that would change, and this is why I don't like it. Because it's 100%, that stays at 1, and it calls it break even. Very odd. But there you go. There's the deal tickets coming out. Keeps it going. Does quite well. So that's what I'm doing with that. So let me show you how I pick a stock. And it's very, very simple. Let me just change the screen over. I use Pro Real Time, which is what this is. And I have a criteria set in place that looks for certain things. This one is based off a Bollinger Band. It's looking for closes above a Bollinger Band, and what you can do is you can just flick through nice and simply till you see one you like. So like that, you know, that's a nice thing. It's had a good drive up, it's sold off, and then it's had solid move to the upper side, and then you see some growth coming in. So this might be a nice market to look at, a nice share to look at, because you can see the strength. Likewise, you come down. Again, this one, it hasn't quite broke it, but you can see the strength coming in. You can see that it's pushed through RSIs. Nice drive up. It hasn't really sold down. So again, there's a nice slope here. Then an acceleration. Could be a good trade. Could be a good market, because you got from there for it to visit the high of there. Virgin money. Again, virgin money, this can be a retracement bounce. So strong drive up, it's come down, found the moving average, and then bounce back up. Personally, I'd want to see it come down a bit further. Shell. Chop, 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 chop. Volume. Jersey Electric. Not so good. Why? Well, the candles are a bit dirty. It surged up, came straight back down. It's trying to recover, but it's showing signs that it could be pushing down. So not so good. Again, here we are. Long tail. Try to push down. No sellers. Shot back up. Good target point here, here, and here. Now that's based off the Bollinger Band. Now we can also look at, say, the river itself. Now this one can pull out a lot of different products. So it looks the same, but what it's paying more focus to is momentum in the market. And there you are, you can see huge drive, came down, found the moving average, bounced off it, and now we've got a good target point here and here. Let's have a look. Longbow, what's with this? Not so good. This one, not so good. Shell takes you back. Okay. All you're doing all the time is just looking for something that's nice. Now I have two filters on this, and I kind of look for what's happening on both, because there'll be shares in each. Now I'm primarily focusing on the UK 100, but I do look at sort of the S&P 500. But the more you go, the more you're looking at, then you can be at it forever, which is why I like these screeners, because I only really have to look at that lot, you know. And then what I can do, if I flick this back over to here, so if I look at, say, BEA systems, so BEE, there's BEA systems. It'll come across. I can look to see if I can afford the trade. Well, click my order on. I'm looking at £1.10 a trade now. Well, that costs 186. It's too expensive for me. I can't afford that trade. So let's have a look at Unilever. ULRV, Unilever PLC. Again, see, 800. Some of these are so expensive you can't trade. So what's this one? PSDL. Phoenix. See, there's a nice trade. It's 31 quid. So it's not out of the reams. I try to keep them under £20 for a cost, and then that way I can have multiple trades running. But all in all, I'm quite happy with how this account is moving. Just steady growth, little by little, and before long it'll be 200 quid, and then 200 quid will become 3, and if I can get it to 1,000 by sort of Christmas, then please tell me that's not a good return off 118 quid. you know, and then that £1,000 next year, well, that would become quite substantial, you know. And then if you look at it the way I am, which is a 5-year plan, suddenly this all adds up, and your small investment can grow into thousands just by being methodical. And then every quarter I'm going to take so much out. I'll have a little treat from it, and that way it keeps me motivated with it as well. Now I could take a treat out now and maybe have a little McDonald's meal, you know, and that paid for it, and it's still got profit within it to recycle. At the end of the year, it might be a night in a hotel, all from just 2 minutes, because it takes me seconds to do this on a night time. At the end of the day, I look through how many shares is there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So 13 shares to look at the end of each night. It takes me less than 20 seconds to see whether I like it or not, because as I've just shown you, I look at the state of play. If I like it, it'll stay. If I don't, I'll just move to the next. Might end up with a basket of 2 or 3 shares. I'll drop it into the broker. I'll have a decent look at it, and then I'll just place a pending order and let it get on with it. Seconds. Doesn't take long at all. And I do that every single day, and every day it grows. And that's how I run my main accounts as well. So I hope that helps. If you're stuck, I'm very easy found. All my contact details are down in the description below. Direct message me, my WhatsApp's there. There's a free Telegram for you to talk amongst yourselves. No dickheads are allowed, no sellers are allowed. It's just nice, clean chat. And if you want to see exactly how I trade, come along to the Scruffy Squad. There's the full course of Way of the Scruff. It's not for sale publicly, it's just for the guys in that group. And we also have a morning face-to-face Zoom call where we talk about anything trading and push each other forward. So, can't be any fairer than that, guys. So as always, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.